Hey there, welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news for July 21st. As always, here's the charts. As you can see, we're trading about 103.59 right now. The bonds hit their best point in early July. We were rivaling rates going all the way back to 2011. But since then, as you can see, we've sold off a little bit. So we're currently looking at support coming in below us at about 103.40 and perhaps as low as 102.60 down here. So got to be really careful right now. Resistance is coming up above us at about 103.80, and so you can see a very defined downward trading channel. Not good for bonds. Jobless claims, existing home sales came out, both better than expected, but again, not bond friendly. So it kind of pushed us down a little bit. Leading indicators had really no impact on bonds today, but the Philly Fed, especially the Philly Fed, did have some positive impact on us, and which is why we opened down here and we're actually trading up here this morning today. So here's the news. The yields are still falling in Europe, so that is kind of bond friendly news. Remember, it is a global economy, so Europe does impact us. Also, June reported a 0.1 inflation. This is much lower than what the Fed wants. Remember, the Fed wants their goal is a 2% inflation rate. So this reinforces the fact that the Fed probably is not going to be increasing the short-term rate. Probably this year. So maybe not even until around March of next year before they really start seriously considering it. So this is again bond friendly, but it kind of feels like we bonds were over purchased back here in early July, and now things are just kind of settling down, and we're going to hold some ground. So to kind of quantify where we're at, Freddie Mac reported the average rate in June to be 3.57%, and the average consumer was paying half of a point to get that rate. The source is down here. So average, I would say bonds were trading about 102.80. Now they're trading about 103.59. That's 79 cents better of where bonds are trading here today versus back last month. What that really means is if a consumer was paying half of a point, we're trading almost 80 cents better, then hey, we might get a 30 basis point or 30.3 points credit back instead of paying points for that same rate. So at any rate, things are still pretty darn good. Don't get me wrong, but that's the quantification. As far as analyst outlook, it's pretty inconsistent. We're going neutral to bearish on the short term. That's 1 to 2 days out. One of the analysts doesn't think we're going to see much movement, either positive or worse. The other one's thinking, hey, it could hit and we could lose a lot of ground, so be careful. The long term, which is, hey, what if you don't have to lock for 30 days? What would you do? Again, the analysts are inconsistent. One of them is going neutral, like, I think we're going to be pretty flat. And the other one is like, hey, I think we're going to bounce back. Like the stock market, it's going to get slapped. So really a lot of inconsistencies right now. Here's my expectations ahead of our next Tuesday forecast. I really think bonds are going to trade between 103.20 and 103.80. So where we're at right now, I think there's more room for loss than there is room for gain. Bonds may, in my opinion, get 20 basis points better. So that could save you a quarter point in fees, but we could get 40 basis points worse. So almost half of a point in fees worse. So my consideration is be careful. If you can float, you just got to have to, roll the dice on the long run. But if you're going to be looking at trying to close your escrow soon, it's probably better you consider locking. But nobody has a crystal ball. So, we'll see what happens. Love to hear from you guys. Leave your comments down below. Let us know what you think. Should you lock? Should you float right now? What's your thoughts? And everything likes to be liked, so does this video. So before you go, please try to hit that like button. And if it's your first time on the channel and you're thinking about getting a mortgage and you're trying to track like when the best time to get your mortgage is, get the best rate. At the top left, you can hit subscribe, and what that will do is it'll give you a quick little notification on your phone when a new video is uploaded. And if none of this makes sense and you want kind of like a little bit deeper background on how these charts and what these bonds sell for and trade for, how they impact you as a consumer getting a mortgage, at the top right here, you'll see the little guy scratching his head. Click that, and that'll take you to Mortgage Bonds 101, teach you the basics. Anyway, that's it for now, guys. We'll see you next Tuesday. Bye-bye.